there's a debate going on between people who feel that the world economy is slowing and risking a new deflationary debt crisis versus people who feel that economic growth has actually got reasonable forward momentum, with inflation starting to edge upwards. I am firmly in the more positive camp in that debate. Now, why? Well, one reason is that short-term indicators are either sending a clear positive signal, like the German IFO business survey and the US consumer survey, or they're in the middle, like US job creation and much of the Chinese data. There is very little that's outright bad. A second reason is that I see enormous dynamism in the new technologies. Look at our zeitgeist, like robotics and biotech. Those are stimulating really substantial investment. Look, it's true that that's been offset over the last year by falling investment in energy due to low oil prices. But oil prices have now stabilised, and actually the latest US durable goods investment orders show an underlying rise. And then thirdly, I just don't buy all the doom and gloom about debt, either in Europe or in China. Of course, European banks are under pressure due to fines and tough regulations. Both of those are bad news for shareholders, but that is not the same as being bad for the economy. Those tough regulations actually make the banks less vulnerable to collapse and less reliant on government bailout. I suppose it is still possible that a big bank might face a temporary liquidity squeeze, but let's be clear about it. That is very different from not having enough capital to cover losses. And in fact, it could actually be very, very easily sorted out by a short-term loan from the central bank. And what about China? Well, of course, there is masses of debt and a lot of bad debts. But remember, nominal GDP is still growing much faster than other major economies. And that just makes it much easier to cope with the debt. China's challenge isn't directly about debt. It's about keeping a good pace of growth. In recent years, that has been achieved, but at the cost of exporting deflation. Well, at long last, there are now signs that is changing for the better. China's prices are starting to rise. I think that's a great sign, not just for China, but for the world economy as well. So where does this leave us as actual investors? Well, the Wertstein base portfolios are up almost 3% since June. And on a medium-term view into next year, the picture I've painted should be good news for equities. But there is a sting in the tail, which risks short-term pain over the next few months. Central banks have not really bought into my view. They're still focused on debt and deflation risk, and the current low level of interest rates reflects their pessimism. If the economy really does keep moving, as I think it will, and the debt dangers fade, then inflation rates and interest rates will likely be rising in coming months. Indeed, bond yields have actually started to go up already. And that could mean some short-term pain for equities before the good news about growth is able to dominate again later on.